The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And another excellent day for proper viewing. Remember to take the red pill now. It is October 31st. We're going into Halloween here. And we've got the markets rocking and rolling, up 17.5 points on the S&P cash, 2.4 billion shares as we start the day. And wasn't the result I was looking for, but certainly we did get a result. This pretty much changes my thinking into the end of the year, and we'll get into that in a few minutes. But certainly you have some decent volume from Friday afternoon at 2 p.m. And I'm looking at some ideas for what to get long for the rest of the year. But we'll get into that in just a minute. Don't get in too big a hurry. Today in 1933, it's a trick or treat. The Wall Street nastiest Halloween surprises. Albert Wiggins, the former president of Chase National Bank, testifies to his personal investment companies had borrowed money from Chase to short sell $8 million worth of Chase's own stock as it crumbled to the crash of 1929. The revelation of this disgraceful conduct inspires Congress to add a provision to the Securities Act of 1934 banning corporate officers from short selling their own shares. And why it bans the corporate officers, it doesn't ban the corporation. And it's kind of interesting to see a lot of times, especially big names of Wall Street, Goldman Sachs, why I have no ability to go look at their books. I've always avoided anybody that had their own trading floor, because if they didn't do it outright, they did it synthetically or through options or for some other reasons, they would go back and jerk traders around in their shares. If it looked like maybe someone was trying to get a little bit of short action on their stock. And if you were long, you probably rode it along with them. If you were short, they were more than willing, whenever there was a significant amount of rubes that would be short something like Goldman Sachs, to take you to the cleaners. And somebody has a great comment here in the den, and no ban on Congress insider trading in the 1930 bill or the bill today. Still insider trading in Congress is allowed. But kind of interesting to see that normally, and it's this way in aviation too. In fact, they call it tombstone, the tombstone mentality. And that is when an airplane crashes and they go figure out what went wrong, then things are changed. But up until that point, if they're in a tombstone, there's probably not a lot of change going on. But that is the way of the world. But 1934 cleaned up some of the worst parts of trading. What I don't understand yet is that China really hasn't caught up to what we learned in the 1930s. And I'm just wondering just how wild that's going to get when there's a huge amount of cash sloshing around over there. But I digress. Anyway, like I said, we were looking at the market. Yesterday, I was looking for a close on Apple below 106.75, and it was like a dime higher than that or something. It had a little doji, and I thought, okay, willing to take and hold my short positions overnight. And what did we get out of this? Well, we got the Bank of Japan coming and dropping a bomb on me. I guess too much to ask to get the engineer to play "You Dropped a Bomb on Me," but we need to do it in a Japanese accent because, of course, that wouldn't be thoroughly racist enough without it. But anyway, it is how can I say this? it was out of the blue. No one was really expecting the Bank of Japan to do anything. The markets here looked incredibly weak, and my guess is that everybody on Wall Street knew it, including the Fed, and the Fed said, hey, I know you're thinking about doing something. Time to pull that ripcord tonight, and that's exactly what they did last night. Japan was up, about 5%? Huge move in Japan, and of course, huge move out here that was probably unpredictable to a greater extent in the dollar index, up almost 1%, up 72 cents. The last tick I have is 86.87 with a high of 87.13, and I'll have to see what kind of volume we have later in the day, but that's it. Mr. Roboto, where is my Fed easing? Is that what it is? If you vote for me, I won't insider trade. Well, everybody's having a good time out here. I guess everybody's probably getting all fired up for Halloween tonight. I'm going as my usual, which is, of course, a ape. Nothing like the ape suit, because no one can really see who's or anything that's going on out there that you're doing. Anyway, I was looking at Apple. Apple, to me, there was a couple of techniques that I used, but basically it was the thing that kept me thinking that the market certainly could pull back today was that doji on Apple yesterday. We are a little higher. There is not a lot of volume. My guess is that over the next few days, we're probably going to pull back to 2,000 on the S&P cash. Now, the problem comes into being a issue of timing, not what the market is doing right now, and light volume and all the other reasons I'd love to short this market. The energy, especially if you look at the Qs out here, was slightly better to the upside. And you can probably say not, especially the last 4 or 5 days, pretty poor. But there is a huge statistical inference that you can get, and that is if you can get to the 1st of November, it is very tough for the stock market to sell off anytime before Black Friday, or, of course, the Friday after Thanksgiving. And it is, I think, our first opportunity to get any more bad news that could get anybody else. Basically, you have a lot of people that are sitting on fairly decent profits with the indexes at the levels that they're at. And are you going to get them to sell and pay taxes this year, or are you going to get them to sell and pay taxes next year? And or are you just going to let the market become a bubble? Well, we were in this exact position in 1999, but it was even worse. That position was, I think, the taxable rates for sales were going from 28% to 15%. And it was a issue for a lot of people that they thought, okay, well, there's 15% in taxes. The stocks would have to come down 15% for me to lose. How can I sell my shares? And what enveloped was a bubble that was burst, of course, on the 3rd of January when you come back. If you want to look at a great chart, look at Qualcomm, the 3rd of January of 2000. I was a pretty active trader at the time, and it was one of the things I picked up off TFNN and Tom O'Brien, where we were all ready to pull the ripcord on Qualcomm. I think it was at 195, 198, split adjusted, and it went to 135, I think, in a matter of 4 or 5 days. So we started the year off with a huge bang, but when I look at what's going on in this, we're higher, lighter volume. Can we get another 10 million shares before the end of the day? Maybe. There's not a lot, but what that tells me is we're probably going to come back and pull back into about 2,000 on the S&P cash. At that point, we're going to have probably some decent volume, and a lot of people not believing what they just saw, which is all these prints above 17,000 on the Dow, all these prints above 2,000 on the S&P cash. It's going to be very hard to get the sentiment on Wall Street changed. And not only that, but we can see some massive movements in these stocks, because you're not going to have a lot of people that are going to want to sell in the next 2 months. They're going to want to, at worst, sell on January 3rd. At best, sit on it for even longer. And that's why unless we get some really bad news the day after Thanksgiving, I'm thinking as an overall level that we're going to see probably a slow drift up in the big caps, because they've had so much. We've seen a huge move in the IWM off those lows, IWM. And, of course, those calls that I bought at the bottom, a distant memory now, but I thought I made a lot of money then. If I would have hung on just a little longer to November's, would have been a big killing on that side too. But we're getting up here, and it certainly looks like while we're going to fumble around, the IWM wants to at least come test this September 3rd high at 117.80. I suspect it will. Then we're probably going to, we may do that later. We may even pull back. But my guess is we're going to pull back over a few days of next week. We've got a little bit of fun buying. I don't think a lot of cash is coming in, but they're going to hold it up. At that point, we got to start convincing people that the wheels are going to fall off the wagon. And I think that is a tough, extremely tough row to hoe, as they said out there. Yep, I think the IWM gets back up to the high before the end of the year. I thought today was the last day that we would have to really convince people to start selling. And I think that's it. And I don't think that there's a great deal of upside for a great deal of stocks. I think if you're going to make any significant money at all, it's going to be in stocks that rocket up, that have high short interest. I'm looking at some of the stocks today in that vein. And Amazon, horrible results. And what's it doing? It's going back and filling this gap. And I think for a great deal of this is that people thinking Amazon is really going higher. There's probably a few people. But for the most part, this is shorts covering and this thing coming back and filling the gap. And, of course, they're probably going to have some pretty good numbers for Christmas. So can it get back up to 318 up here by Christmas? I think so. Maybe even go a little higher. Could be. They're going to come out and say, you know, we ship more packages than Carter has pills again today. There's going to be a lot of that. And as long as the market's slowly drifting up, there's no reason Amazon can't really slowly drift up, even with the bad news. Tesla is another one. Now, Tesla may be a little different case here. And that is, if people were silly enough to be buying this thing at $291 back up on September 4th, this thing is still significantly lower than that. You can still have people start to do tax sales on stocks that are significantly lower. And this might be one. You might find that this could find that lower range into tax selling. Not a lot of volume here today. This thing's sitting under this gap. This would be one that I'd be looking at. But again, being short next 2 months probably going to be extremely difficult. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I had a question in the den, and of course you can always ask me a question in the den. You can email me when I'm at my palatial mansion, the White House, the real White House, not that funny one that they have up there in Washington, D.C. At the real White House, you can email me at path@tfnn.com if you want to ask me a question. And, of course, you can also call us at 877-927-6648. One of the questions in the den was, do you think it really gets to the high? And they were talking in IWM of the 121 high. And the biggest problem that I could see in this market long term, not short term, if you want to make some long term, is that we go into a huge bubble. And the movement of the Bank of Japan, some hints that we could see a QE4, that they could run this market into a giant bubble until the day that they raise interest rates, is a definite possibility. Especially when you look at it historically. We talked about, maybe 2 weeks ago, about what was going on almost at the same time in 1929. Actually, it was the midsummer of 1929, and that was the Fed at the time started talking about raising interest rates and slowing things down, cutting margin, and everybody dropped on them like a ton of bricks. And I remember that Mrs. Yellen, I think she's Mrs. Yellen, said something about biotechs being at a bubble 3 months ago, and got a bunch of "get off my lawn, lady" kind of comments from people in the financial world. And it was, we'll take care of the trading, you just take care of the Fed kind of stuff. Kind of interesting and weird in a way. But certainly we see it. Now, some of the stocks that I'm kind of questioning the move. I don't think it should have gone down, but looking at LinkedIn and their discussion last night, should have gone up. And I think the answer is we had a lot of people short some of these stocks. Like me, they were short. And I wasn't short this one. Especially these social stocks have a bad habit of giving you a big surprise. But certainly this is back up to the previous high. And it went, 5 cents short so far today, just a little under it, but plenty of volume, 5.5 million shares so far today in LinkedIn. And I think you can see a lot of this kind of action, and that is it going to be any better? The answer is no. Is the one and only problem is going to be if you can't get anybody to sell in the last 2 months, do you get this kind of action from people that are short these stocks when they don't get horrifically bad news? And again, we're talking about stocks like Tesla, LinkedIn. Facebook was kind of interesting in that basically if they wouldn't have said that they were spending any money, I think that they would have been at $80. The only thing anybody hates right now is if you don't make a lot of cash. And, of course, not seeing a lot of reaction out here to Facebook today on this. It went into the gap yesterday, and that gap was from the 17th of October. And volume was a little higher even. So you had the gap down. You had kind of a piercing of the gap from the 17th in Facebook. And at best, maybe a doji out here today. Now, would this be a stock that could get back up to 80? It is, but if I'm going to have to wait 2 months for a stock to move $5 on a $75 stock, I don't know if I want to play it. And that comes into the problem out here is, one, you've got the risk. Two, there's probably these stocks that do have the upside potential on a short squeeze. It may take you forever to get your cash out of them. And that is what I'm looking at and will be looking at over the weekend is how can I make some big bucks in the market? And the question may be, how do you make small bucks in the market if big bucks are not available? So we're going to be looking at this very hard. Had people ask me about shorting IBB, and, you know, is this probably done some kind of pop-up here and, you know, at $300? Yeah, can it play around here for a while? Is it going to probably pull back, maybe fill a little bit of this gap up, maybe $295? It certainly can. But again, you're going to have some kind of earnings disaster come out in a lot of these stocks in the IBB between now and Christmas. And my guess is most of the earnings came out. They weren't that bad. How are you going to get somebody to give this up and pay taxes on it this year instead of next? And that, in a core, is my dilemma coming in to a November with the market up. How do you get people to sell? How do you get into the bearish case? Since everybody's already bullish, how do you make any money? And we'll talk more about this conundrum when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Look at the S&P, and I mean, we're pretty close, 2 points off the high today at 2019. Are we going to, my guess is we're going to play around between here and 2,000 over the next couple of days. And that's it. Oh, I got a question here. Hang on just a second. And I got just a little housekeeping to do. And there we go. See, just looking at some of the email everybody's sending me, see anything. Anyway, we came within a couple of points. Is the volume okay? It's good enough. Let me put it that way. We're probably going to have some back and fill Monday and Tuesday. We've got fun buying. I looked at Trim Tabs data over the last couple of days. It doesn't really show that much coming in. So my guess is that most of the cash coming in right now is going to be cash coming in from Europe. And, of course, probably why we're seeing these kind of moves in the dollar index, that kind of stuff. But, again, there's this whole bias of trying to get everybody to sell their shares in the last 2 months of the year, and it's somewhat problematic. we've got some of these stocks that have meandered back up off of horrible earnings. One of them is Bloomin' Brands, BLMN. And I was looking for some of these to give me some kind of sign that, I've come back, I've filled this gap. In the case on this one, it was a miserable gap down on 16.2 million shares on, August 5th, with 16 million. And we're doing 1.3 million now. So it gives you the idea we'll come back up here, pretty light volume. But at the same time, probably not going any higher, but any big signal out there, it's going lower. There's more of these companies. Bruker Corporation, BRKR. Gap down, it's been meandering around down here for a while. Little pop back up to the line of resistance at $21, but I can't really find anything. Been looking at Costco for the last few days because, of course, volume has been horrifically bad as we've gone through this October 10th high. And the 131.41 of that October 10th high had 3.3 million shares. So as we get over here and start cracking through that, we had 1.7 million shares a couple days ago. Yesterday, 1.3 million shares. Today, I'm going to call it 1.3. A little less out here. So don't have a lot of upside. And the problem is, do we have a lot of downside? Anyway, I've got a lot of these stocks to go out and look at. Been wondering whether we could get a bottom anytime soon in crude. And some of these stocks, like Carbo Ceramics, kind of making some interesting patterns down here. And, of course, a little bit of volatility in this stock. But I'm wondering if some of these ever come back. Of course, Carbo Ceramics makes specialized ceramic sand for fracking. A lot of people figured out that they can use other types of sand that is much cheaper than Carbo Ceramics, and that's why this thing has come off a high of $156, but it's down at 50. So could it bounce? This is the kind of stuff I'm looking at out here to see whether or not there's anything that we could get. Now, not bad. There's two gaps up here, and there's a gap up to 90. In fact, this is a three-gap play to the downside plus a lot more. So could you come back and fill all three of those gaps over time? Maybe if we got in a land war and we needed a lot more crude than we had now, maybe. Unfortunately, I don't think so. But could you get a move from mid-50s to back to 85 maybe, or 80 in the middle of that? I'm thinking that's starting to look like the kind of charts that we're going to have to play if we're going to make any money. Just a few of them out here. The ones at the highs don't really look like they have a lot of juice. CSL is Carlisle Company. Another one of these that's back into its July 3rd high, $88.36. And it is, what else do we have? Yeah, you had 800,000 shares, got into it with 20,000 shares today. Are these things going to meander back and forth a little bit? Yeah. Is it going to be, again, very hard to get people with stocks at all-time highs to sell in the next 2 months? The answer is yes. But, again, you don't have to go higher. You just have to go sideways and let shorts eventually come out. Gold, it certainly looks like we're going to have some moves. If you look at dust out here, this certainly looks like it's on a rocket to go back to the $51.26 high from December 19th. And, of course, a huge gap away through two existing gaps. So this is the gap of a gap. When you look at DUST, that gap, basically there were two levels of it. The first one was on the 2nd of January. The other one, or the next one, came out to make a fairly large gap on, the 10th. And we're back. I mean, we just jumped right over. Talk about jumping over the creek. What a great example. This thing almost perfect jumping over the creek. And, you've got multiple gaps out there. And a lot of times that's exactly what they do. They just jump, and that's it. Don't give you a lot of warning. I'm just glad I wasn't long any gold stocks this morning. I would have been spanked. HOG, H-O-G. For the grace of God Therefore I go, the grace of God. There's a saying like that. We've got some up here again, down on high volume on the 22nd of August for Harley-Davidson. This thing came down on 9.2 million shares. Tried to get back into it on September 11th with 3 million shares. We're back into it with 1.8 million shares. A lot of these companies that look to me like they're going to be highly sensitive to higher interest rates certainly are the weakest of the bunch. But again, fairly good numbers, nice gap up. Certainly nothing like the volume we saw back there. You had the nice gap up on earnings on the 21st here, 6.8 million shares. So you had some juice up here. But again, do you get this thing to maybe meander up 4 more points to $70 for the beginning of the year? It's going to be tough to say that these things just don't stumble up a little bit, but I'm not going to wait for 2 months to get $4 out of the hog. I'll get some bacon. Home construction. I'm very interested to see how the housing business is going, especially when I'm looking at sometime in the future seeing these interest rates go higher. I wrote in my newsletter this morning that there was we've talked about him before, and his name is Vernon Smith, who did real-time tests with real people with real cash in the way they traded. And Intel, even when they were told that there was a finite amount of time, I think most of these tests ran like 4 hours, you were able to trade something back and forth like commodities. And you got to keep the cash that you had when the game was over. Almost no one would actually sell before the time was over, and they'd all end up with nothing. There would be 1 or 2 kind of smart guys out of 100 that would end up with all the cash. The rest would end up with worthless shares of stock because, of course, the rule of the game is whatever you sold and kept, you get to keep. So they'd start everybody with like $200. One guy walks out with $1,200 or $1,500. The rest walk out for zip. And even when people did this thing several times, there was the desire to go right up to the edge and the end in trading, especially when there was bubbles forming. And the question I have is, even with some of these stocks, is it going to be the day before interest rates go up that we start really seeing huge downsides in these? The upside probably extremely muted, though. The ITB, which is the Dow Jones Home Construction Index, certainly doesn't have any volume. Last time we were up here was September 17th, $24.31, 10 million shares. Got into it today with 5 million shares. So, again, a lot of bearish stuff. The question is, how do you get people to roll over here in the last 2 months of the year? We're going to have a lot of Ebola, I think, to get that going on. IYR, another one, telling basically the exact same story. This is the Dow Jones U.S. Real Estate Index, IYR. September 8th, 15 million shares, 9.2 million shares, and actually just 6 million shares today, 9 million yesterday. But as we actually break this high, lighter volume out here. So I could see why a lot of people would be ready to pull the trigger short out here. Just experience tells me that seasonally it is extremely tough. Some of the safety plays out here also having a little issues. K&B, which is Kimberly-Clark, making diapers and all the other stuff that they make out of paper. The July 16th high, 114.45, 2.4 million shares. We got a little more than half that right now, and a nice little doji on this one, KMB. Land's End. Talk about bucking up here at the highs, and again with lighter volume. The September 18th high on this one had 930,000 shares. We get into it with 500,000 shares 3 days ago. 322,000 shares 2 days ago, 177,000 shares yesterday, 170,000 today, and kind of pulling back in. So of the stocks out here that look weak, of course, retailers, clothes retailers, some of the worst. Live Nation Infotainment, entertainment, LVY, he said, was and has been up against this February 25th high at 2480 with 3.6 million shares. Well, we've got 3.8 million shares already, so we are above it with a volume, LYV. You could probably say that they move back to 2480 on light volume maybe in the next couple of days. May not be a bad shot on this. This is a legitimate breakout. Norwegian Cruise Lines. I wanted to see how this was doing after it calls the Ebola issues. This thing really rocking out here. Unfortunately, less than zero volume. I think we need to, it's like going negative. But that September 2nd high on earnings, $38.05, 6.5 million shares. And then the Ebola scare took it down to $30.44. We're back up at these highs. Yesterday, 1.8 million shares. Today, 668,000 shares. And the question I saw from many people on Wall Street was, with the dollar moving, how many people, and a great deal of them do, fly over from Europe and catch a cruise, and how that's going to affect these cruise lines. Mostly because a lot of people haven't taken and already signed up for a February cruise. What is going to happen when they try to get a airline ticket instead of $600 or $700 round trip? It's $1,000 because of the exchange rate. So still issues on that. What else do we have out here? Qualcomm was one that I've been thinking about quite handily, mostly because it looked to me like Apple was having some real second thoughts about this 108 level, and I'm seeing a lot of people come in and start to sell on Apple. Doesn't mean it's going to go down. Maybe enough people just to backfill anything that they do. But Qualcomm to me was one of the more interesting stocks out here, and I knew it was right up against resistance, and I wanted to see how it was doing today. 12 million shares on this gap down that happened on the 24th of August, and first time into it with 12 million shares back on the August 21st. We're back into it yesterday with 5.3 million shares today, 5.2. So it's, decent volume. Certainly nothing like the 37 million shares down. That was a double whammy, earnings and China dropping the hammer on them. And, of course, China wants to use chips made in their own country and wants Qualcomm to basically give them the keys to the kingdom, which Qualcomm will not do. SBA Communications, SBAC, this thing's kind of a high flyer. One of the ones that did look to me like a valid retracement out here, and I got a little taste of it, but a couple of bucks in the scheme of things probably not going to do me much good. I want a bigger taste. I don't just want to wet my beak. I want to do the backstroke in some cash. And but I did like this move out here. Volume did end up being very light in the morning and very heavy back down to this other side. But the September 12th high, 114.37, 1.5 million shares. When we look at that today, 1.3 million shares, but it's gone above it and is going to close decidedly below it. So just a few stocks to be looking at as we go into next week. And when we come back, we're going to look at copper, Claude's copper clappers, if you like Johnny Carson. We'll be back in a minute. This one's trying to make a test, so we'll see how that does.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we had some bad news in space travel this week. One spaceship blew up. Thank God there were no people on that one. Unfortunately, we've had another fatality in the race for space, this time in the private sector. I don't know what else you can say. It's not going to be an easy thing ever to do. It's always going to be difficult, much more difficult than airplanes. They will continue to get better over time, but you just, I'll always probably remember the most elegant words ever said, that I've ever heard anyway, and that was the space shuttle disaster in '86, and I probably can't do it justice, so I won't, but probably the best speech about a tragedy. Anyway, as we look at EEM, the We've got a little gap just above here, $43. And, of course, this is the emerging markets index. You've got a higher volume low out here, so you need to test that. We've got a doji today. Volume's going to be about the same. If I was betting man and not a trader, I would say you'd probably look for that gap out here, and it may meander around, but my guess is it'd be stumbling up to this $43 level, and at that point, you're probably in a bigger trading range between that $43 and that $40. Remember that most of these companies in these are going to be commodities. They're not going to be helped a great deal by the Fed printing and throwing money out of the back of 747s. It's not helicopters aren't even big enough anymore. They got to go digital bitcoins out of the back of 747s. So probably not going to be a lot of these emerging market companies or countries that can do a whole lot to improve themselves. Maybe a good range of opportunities for trading over the next few months, especially when we see things like gold being hit, that kind of stuff. What can you say? I wanted to look at something else, and I can't remember what it was. Maybe it was UTX. I think it was UTX. This had a very good indication last week of where you wanted to be short and how, just how you could set up a trade, and you wanted to know where you were going to be wrong. We brought this up on the Tech Insider Hour last week, and this is exactly how these things do work, and that is that if they're going to fail, normally you gap right over them, and that's what we had in UTX. But the nice thing is, talk about a nice way of being short. You're going to be, maybe a 2% loss on this if you set up the trade correctly today and waited for it maybe to pull back a little bit before you covered. But at this point now, it's broken above it. You want to look at the volume. If the volume was significant, then you start looking at these stocks to go back and buy. In this case, 105.36. If the thing is nice, light volume back in here, that's probably going to act as support, and maybe you get $5 to the upside at 110. But that's how you set them up. But good idea of watching when you're right and when you're wrong, and that one was a good one. We're going to see you in about an hour and 20 minutes in the Tom O'Brien Show. We'll see you then, and can't wait for Tom O'Brien today. See you Monday, same bat channel, same bat time. Sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.